On Unit 3, we'll be talking about the sales and purchase agreement and understanding the sales and purchase agreement in detail. So now guys, we're finally ready to jump into start understanding what sales and purchase agreements are. And basically, the question is, what is an S&P and why is it important? And the answer for that is an sales and purchase agreement is basically a legally binding document, and it's where offers are made. And what I'll be teaching you guys over the next few slides are learning the S&P like second nature, because getting this wrong could cost you thousands, and getting it right on the other hand can help you make 6 and even 7 figures. So let's just jump into what the S&P actually is, and we've actually got 2 agreements to cover. The 2 agreements that we'll be going over is firstly the standard sales and purchase agreement, and secondly the auction sales purchase agreement. Now, more often I use the standard sales and purchase agreement, and when it comes to buying privately or selling privately, it's always the standard sales and purchase agreement. Now, the auction sales and purchase agreement, I only have ever witnessed by when I go out and buy a property through an agent or an agency, but I've never actually sold a property via an auctioneer privately where the auction sales and purchase agreement is needed. When I do sell at auction, it's often using an agent and using their resources, off which they kind of handle the sales and purchase agreement for me. But they both are pretty much the same, they're identical. The only difference is the additional auction sections. And I've actually made a reference where you can download the blank templates, the blank sales and purchase agreements for both of them in the downloadable section for this week's learnings. So if you want to pause the video, feel free to do so. Pause the video and go and actually check it out so you know what it looks like. And they're both the 4th edition 2012, and it's actually binded by the Auckland District Law Society, so it's agreements that will hold up in court. So guys, we're going to be covering the sales and purchase agreement and really understanding the important pages of the sales and purchase agreement. So on this slide here, we're going to have an action-packed session where we're actually going to cover all the important points, and you can see that I've actually listed 1 to number 17 on all the points you guys can make references to. And it's a blank S&P, so there's no information filled, but I'll be covering and explaining what information needs to go here and where you can actually obtain it from. Of course, I'm going to be showing you examples of filled out S&Ps that you can see in the ongoing weeks, as well as the downloadables as well. But let's just jump into it. So on this front page, this is the first page of the sales and purchase agreement, we have the date, and the date is basically left blank until both parties have actually signed and the agreement is ready to go. And if the agreement is not ready to go, as in you've made adjustments and the vendor hasn't signed off on it, then don't actually date the agreement until everything is all sorted. Number 2 is the full name of the vendor. So the full name of the vendor is as per the certificate of title. And you can actually obtain this through the lawyer, or if you're buying it through an agent, the agent normally has this information. And you want to ensure the name is the same as what it appears to be on the title, because if you're putting a different name, that means it won't be a binding agreement, or someone has signed where they don't actually have authority to sign. And it may not actually be an individual's name. Sometimes it can be a company name or a trust. So it's very important to copy it exactly as you find on the title as the name of the vendor. Now, number 3 is the purchaser's information. So this can be your personal name or your company name or a nominated company. And this is where you put their entity. This is where you write it. Number 4 is nominating the S&P to someone else. So you can either highlight yes or no, and basically it gives you more flexibility and another option if you decide not to settle the property yourself. And we'll cover more into this in the upcoming weeks on why nomination is used and why we use it personally ourselves, why I use it as a form of protection as well. Number 5, very straightforward, depending if the vendor is GST registered or not. Most properties we buy are from homeowners, often private vendors that are wanting to sell, and more often than not, they aren't GST registered, so it's always a no. That's what is often highlighted. Now, when it comes to selling on the other end, I am GST registered, so that makes me, as the vendor, yes, I am GST registered. Again, this is something that your lawyer and accountant can actually help assist with. So we'll just be covering the GST portions very briefly. Number 6 is the address of the property. Again, it's very straightforward stuff, but you want to be copying this exactly how it is appearing on the certificate of title, or as per the council documents that you can find for the property as well. Number 7 is the estate type, which we have already covered, and this will be stated in the certificate of title as well. Most cases, it will be either a fee simple title or a cross-lease fee simple title. I personally haven't really seen the other ones being used personally myself, other than Stratum freehold, but otherwise leasehold and cross-lease leasehold and Stratum leasehold is all options that I've never used and will probably never use as well. Number 8 is the land area and the legal description of the property. Again, these are more government and council terms, and you can actually find this on the certificate of title, and all we're doing is copying it word for word and transferring it across to the sales and purchase agreement. Number 8, we've got the land area and the legal description of the land. Again, it's on the certificate of title, so you again just transfer it right across over. Number 9 is the section where you'll be writing your offer. And in week 2, I'll actually teach you exactly how to present your offer so you get the price you're after. Number 10 is the GST section, whether you're buying it plus GST or GST inclusive. And in most cases, when you're buying a property from homeowners, they often won't be GST registered. And the default option we circle is the inclusive of GST amount, if any. However, in some cases, you may be purchasing from another investor, which I've also done in the past, and they actually may be GST registered, of which you would then circle the plus GST, if any. Therefore, you would actually reduce your purchase price by the current GST rate, which is currently sitting at 15%. For example, if you're wanting to buy a property at $500,000 and you're buying from a homeowner who is not GST registered, all you do is write down $500,000 in the purchase price and circle inclusive of GST, if any. However, if you want to buy a property that the vendor is GST registered, you would actually reduce the $500,000 initial purchase price that you're willing and prepared to pay and reduce it by 15%. That gives you the purchase price of $434,782.60. This is your purchase price, and that's what you'd actually be writing in the purchase price section, and you'd be circling the plus GST, if any. And again, this is calculated by removing the GST portion off the $500,000 purchase price, being 15%. Then we move on to number 11, which is the deposit clause. And the deposit is basically the amount you're going to be paying when the contract goes unconditional. And this amount is actually negotiable. It means the deposit you pay when you go unconditional. However, it can be as low as 0%. You can write 0% off the purchase price, or you can actually write a fixed amount. You can actually write $10,000 or $5,000. You know, it's been some cases where I've actually negotiated the deposit as much as $0 altogether, and the vendor only gets all their money upon settlement. So, you know, that makes it very, very favorable for me, because in terms of cash flow, I don't have to put anything up front until the day of the actual settlement in itself. However, the normal rule of thumb is deposits normally sit around the 10% mark, and sometimes vendors actually need to use the deposit prior to settlement, which I use as leverage to say, okay, well, if I'm prepared to offer you, X% off deposit, or 30,000 or 40,000 in terms of deposit, which I'm prepared to allow you to have early access to before settlement, are you able to possibly give me a better price on your property? So it's all give and take, and that's something you'll be working with the vendor on. Also, as a note, I know I was saying that the deposit is paid when the contract goes unconditional, and you know, you guys are probably thinking, well, what's unconditional? This will be explained in the later lessons, but equally, the deposit amount can be paid in any way or form. And again, I'll discuss this in upcoming weeks because it's a little bit confusing to understand now. But there are cases where you can say the deposit is only paid, a day before settlement or something like that. There's all these different ways you can write it, and it's depending on how you want to structure it according to yourself. So number 12 is the date that you settle and own the property, and you want to put a date that suits yourself and the vendor. And often I put, for example, I might put the 20th of August, but I also might write or earlier by mutual agreement. If it suits me and if it suits the vendor to actually settle earlier, I might go ahead and do that. And now we move over to number 13, which is the interest rate charged to the buyer for settling the property after the settlement date. So basically, number 13 means that if you don't settle on the agreed date, there's actually a penalty you have to pay to the vendor, and this normally comes in a form of a percentage on the purchase price. So the normal range agents normally set for this interest rate is anywhere between 12 to 14% of the purchase price. And the reason why it's so high is because it encourages the purchaser to quickly get everything together and actually give the money on the date that they said they would, so they can avoid paying a high interest rate of 12 or 14% of the purchase price. And keep in mind, if the purchase price is somewhere around that $500,000 mark, you're looking at paying a huge chunk every single day or every single week as well to the vendor. Now, in terms of doing deals privately, this can actually be negotiated. You can actually put any rate you want, and often I've done rates as low as 2%. I've just put 2 as a number just to have something there. And equally, you could put 1%. It's entirely up to you and what the vendor will accept. And there's even been times where I've actually needed to pay interest on the property because for whatever reason I couldn't settle the property, or my end buyer couldn't settle the property, and I didn't have to worry about the huge interest payments because I was only paying 2% of X purchase price. And that just makes things a little bit easier for me, and it helps me buy a little bit more time before I gather the funds to actually go out and settle the property. So now we're just over halfway through the first page of the S&P, and we go on to number 14, which is the finance conditions, the conditional parts on a S&P where you can request for certain information. But more in particular, number 14 is highlighted around finance conditions, and this is basically something you can put in as a buyer to say, yes, I need finance, and you can use it as an escape route, an escape clause, should you decide to not go ahead. But we'll again cover this a little bit further in detail, and you don't actually need the section altogether at all in the conditions, and you can still actually have conditions in the agreement without filling this little section here, and I'll explain this in the upcoming weeks as well. So moving to the right side of the section on conditions, you'll see there's LIM required, there's building report required, and OIA consent required, and Land Act that is in kind of association with the previous condition, which is the OIA consent required. So I'll go through it one by one, and LIM basically means Land Information Memorandum, and I'll actually cover the LIM a little bit more in depth moving forward on other lessons as well, so I won't go into too much details just yet. But the Land Information Memorandum basically highlights the footprint of the area of the property you're buying, and it's important to make sure the footprint is as per what the physical properties of the property is. Next one being a building report. Building report is very straightforward. It's whether or not you decide to go ahead and order a build report, yes or no. Often if you circle yes for the LIM or building report, it's something that the buyer goes out and gathers themselves. It may not be something that the vendor is willing or prepared to do, but it just means you're buying yourself a bit more time because you're requesting the information from other third-party sources before you can make a decision to go ahead and purchase the property unconditionally. Again, I'll talk about what conditional and unconditional means in the upcoming lessons as well. Now, the OIA consent required basically is an Overseas Investment Act that got brought in for people buying property overseas. Now, I'm not going to cover this because I myself, in the 4 years of doing property trading, have never actually come across this, or under my impression, I don't believe I've sold a property to someone overseas. It's it's always been a person that's bought the property locally, or if they have associations with someone overseas, they are buying it in a company with a local director or local shareholders or something in that basis. So this one here isn't something that you're going to likely come across, and if you do come across this, your lawyers will probably have a better understanding of this act and better able to explain this to you than I would. And we've got number 16, which is covering tenancies, and basically in this section here, sometimes I allow the vendors extra time or even a short rental period if they request to rent the property or need more time before finding a new property to buy, or before they gather all their belongings and move overseas, or whatever the next phase of life it is for them. And allowing the previous vendors to actually stay can give you leverage in terms of the purchase price you're buying the property for. So keep this in mind, because this can actually be really beneficial to you as well. Lastly, number 17 is the sale type, whether it's private or by an agent. This is a blank agreement, and this is something I'd normally use, and right next to sale by, I would normally write private treaty. And private treaty just means that we've drawn up the agreements between vendor and I ourselves, and it's something that we both agree on. So that's pretty much it for the first page. There's a ton of information, and I suspect that you guys would have to pause this video and go check out the other downloadable documents for the S&P as well, to see a more clear version of this first page. But there's a lot of things to understand, and we'll be covering S&P where some of this information is filled out, so you guys can actually see what is supposed to go in these sections here as well. So on this slide here, we're actually going to go over an example S&P with all the sections actually filled out, just so you guys understand what is supposed to be filled out in these sections. So let's start off from top to bottom. On the first section we'll be looking at is the date, and you can see the date's been put there, very straightforward stuff. Vendor is John Smith. Typically speaking, the surname goes first. It doesn't make a huge difference, so whatever order you want to do it in is fine, but normally from the certificate of title, the surname appears first, and we just copy how the title has also written the vendor's name. The vendor's name also may be an entity. It could be a company, it could be a trust, and whatever the certificate of title says is what we copy over into the sales and purchase agreement. The purchaser is Joe Bloggs Properties Limited, which is actually a company which Joe Bloggs would I assume owns. This is just an example that we've put in here. And we can move on to the next section where it says, is the vendor registered under the GST Act? And you can see that yes is crossed out. So that means the vendor is not GST registered. No is the selected answer. So let's move on to the next section, which is the property box section, and we can see most of the information can be gathered from the certificate of title. So the first thing we'll be looking at is the address, and you can see here it's 123 Fake Street, example suburb, Auckland City. And it's a fee simple estate type, so we can assume that it's a freehold property on its own section of land as well. And the legal description that's been described here is 752 square meters, more or less. You don't have to write more or less, actually just write what appears in the certificate of title. You've got the lot number, which is number 36, the deposit plan, which is 210574, and there's the unique identifier or certificate of title ID, which is NA126A/651. And all of this information is actually gathered from the certificate of title, and however it appears on the title is how we write it here. There's no difference to how we're writing in the information. And don't worry too much if the area, lot, and even the DP is written, not exactly according to the certificate of title. Try to do your best. But the main thing to keep note of is the unique identifier or the certificate of title ID number, which the lawyers can actually search up on their systems and find out what property belongs to who anyway. So moving on to the next section, we go over to the payment of purchase price. And the first thing we can see in red is the amount of $641,200. And we'll cover later on in the upcoming weeks on why I haven't actually put down 641,000 and why I've put down 641,200, but that's for future oncoming weeks, and we'll be discussing this as well. So moving to the right, you can see that plus GST has actually been ruled out. What that means is the option selected is inclusive of GST, meaning that this property includes GST and we won't be paying any extra on top of $641,200. So the deposit clause, you can see, says $5,000 payable upon, $5,000 payable to the vendor's lawyer's trust account upon going unconditional. Now, this can actually be reworded any way you guys want. You can write payable upon conditional to the vendor's lawyer's trust account. And all that means is once the vendor has accepted this agreement being a conditional agreement, again, conditional, unconditional, I'll be explaining in the upcoming sessions, means that even if it's a conditional agreement, you can still transfer the money across to the vendor's lawyer's trust account, and then lawyers can confirm this. But for me, I never put down any money until I know the deal is going fully ahead, 100% unconditional. And that's why I've always put in something similar to this, $5,000 payable to the vendor's lawyer's trust account upon going unconditional. And you want to put it in the vendor's lawyer's trust account because you don't want to pay it directly to the purchasers, because if they go out and use it, or they might even say, oh, I've never received the money, and it just causes more heartache and drama that can be avoided. I've never had the issue of paying directly into someone's bank account and the money going missing or anything like that, but just to avoid it completely, I've been told by my lawyers to write $5,000 payable $5,000 payable to the vendor's lawyer's trust account upon going unconditional. So that's how it's worded here. And the next section you can see is when the balance is to be paid for the remainder of the purchase price. So on this section here, we've got 28th of July or earlier by mutual agreement, and that's all you need to write. But the settlement date is something that needs to be negotiated and accepted by both the vendor and yourself. It's a mutual understanding that you both agree on. And directly below that, you can see the interest rate for late settlement. I've actually put down 2%. And that's a per annum basis. So I'll be paying 2% of $641,200 across the year, paid via weekly or monthly payments to the vendor should I not settle on the date of the 28th of July. And we move on to the next section, which is the conditions section. And you can see for the finance side, which is on the left hand side there, I've actually written NA for everything because we don't need finance. We've already got our finance sorted, so that's why I've actually written that. And even if you don't have your finance sorted, I'll explain why you don't need this conditions section. And there's actually a different section inside the S&P that you can actually put all your conditions in, and that's how I do it. It makes things a lot easier. Moving to the right side of the conditions, we can see both LIM building report and OIA consent required has been ruled off with yes, and the selected answer is no. So that means we won't be needing a LIM before we go out and purchase the property. We don't need a building report, and we aren't overseas investors, so the Act doesn't apply to us. And we can actually leave the Land Act fully blank below as well. For the tenancy section, I've written NA because it means the property that we're buying is going to be vacant. You're most welcome to write vacant instead of NA. It doesn't really make a difference as well. It just means that you won't be buying the property with tenants already living in the property. Lastly, highlighted in red, we can see the sale is by private treaty. So all we do is write private treaty at that bottom over there. And you'll notice that there's a whole bunch of JBs and another little squiggly line, and that's basically initials. So JB is Joe Blogg's initials, and the squiggly line JS is John Smith's initial. So they both agree on all the terms of everything. And just as a rule of thumb, I like to write my initials on all the main boxes. So that's the property box, payment of purchase price box, conditions box, tenancies box, and sales by box as well. And I've also put one extra one on the bottom of the page just as a rule of thumb to ensure that everyone's on the same page. And I suggest you guys do the same as well when you're starting off, just to get in the tune of things and the rhythm of putting initials in all these locations as well. So on this slide here, we're going to be covering the further terms page of the sales and purchase agreement, and this is the page where we can actually add in our own clauses on top of what the binding clauses are in the general S&P. And there's actually clauses 1 to 17 that is standard as part of the sales and purchase agreement, which I encourage you guys to read. And you know, it's going to take some time because there's a lot of content to actually read in the sales and purchase agreement, which you can find in the downloadable section for week 1. But we're going to be covering the further terms page because this is where I actually write in a lot of my conditions. So you would have remembered from the previous slide that on the conditions page I wrote NA for finance and I circled no for pretty much every other condition, just make things easier for myself. And basically the clause you can see here is something I've inputted in myself, and I call it the due diligence clause. And 18.1 is basically saying the vendor allows the purchaser 10 working days for due diligence upon their discretionary satisfaction. This is for the sole benefit of the purchaser. So let's just break down that clause to find out what that actually means. So firstly, due diligence is the process of doing your own checking on the property to make sure it's a sound investment and to ensure that you can make money on the other end. You know, that's what I consider due diligence is. It's to do your research on something before actually going ahead with it, right? So what the clause actually states is the vendor will allow the purchaser, which is myself at the time, 10 working days for this due diligence process upon the purchaser's discretionary satisfaction, right? So that means the vendor will allow the purchaser 10 working days to go out and do their own research on the property to figure out whether it's a sound investment, and whether it is or isn't, I don't actually have to voice my finding to the vendor. So if everything works out perfectly fine and there's actually no issues, but for some reason I have a bad feeling that I don't want to go ahead with the property, well, I can actually turn around within the 10 working days and tell the vendor, hey, hey, you know what, the due diligence actually didn't come out successful for me, and I choose not to go ahead with the property purchase. Even though there could be nothing wrong at all, the reason why we put this clause in is because if you have actually highlighted the finance clause in the conditions on the previous slide, that means that you have to actually prove how you didn't get your finance or why did you not get your finance. Whereas you know, if it's the case that you do actually have your finance but you just want to change your mind, well, you can't do that because the vendor may actually request, can I get proof, or my lawyers are requesting proof on the fact that you're actually unable to get finance. And if it so happens that your mortgage broker or banker has already sent your lawyers a letter saying that you can get finance, well, guess what? Your lawyers are going to have to disclose to the vendor's lawyers and say, actually, we do have finance available. We have gotten finance, but we chose not to go ahead with the property. And then there's going to involve a lot more drama. There's still not too much the vendor can do to force you to buy something. But you know, equally, you don't want to be caught out in that position, and your lawyers will be able to explain this more in detail to you should you want to understand this in more detail. To make things easier for myself, I just rule out all the conditions on that first page and leave this due diligence clause in, and it allows me to pull out of the sale should I, you know, find any reason that I don't want to go ahead, or I find another property that I can make more money on and I'd rather invest my money there. Well, guess what? I'm going to use this clause and tell the vendor, hey, something's come up. You know, I'm not going to tell you what it is because it's up to my discretionary satisfaction, but I don't want to move ahead. And guess what? You guys can just walk away from that contract, walk away from that deal, and the vendor unfortunately has to go out and find a new buyer for it. And you can see the second part of the sentence, it says this is for the sole benefit of the purchaser. And it really is. It's really just for the benefit of ourselves, being able to walk away should we not want to go ahead for any reason at all. And just to also make a note, I've written 10 working days, but equally, you guys can put in however many days you want. I have kind of found through experience that when I write kind of 10 to 14 working days, it's a period of time that's reasonable for me to go out and do my due diligence process that the vendors are actually happy to accept. However, if you want to put something insane and absurd like 40 days, guess what? That's still doable, and it just means you've got more time to actually complete your due diligence and also more time to go out and look for a buyer if you want to on-sell the property or whatever it is that you want to do, of which I'll be explaining more in detail on the upcoming sections as well. But keep in mind that if you've put a time frame that's too long, well, you're actually going to be tying up the vendor, and they don't want to do that. They don't want to type a contract that's going to tie them up for the next 40 days, and it means they can't actually sell their property to anyone else because you're out there trying to do your due diligence or find another buyer, whatever reason. So the happy medium I found is kind of within 10 to 14 days, and that's essentially 2 to 3 weeks, and that should be more than enough time for you to actually go out and do your due diligence. On the bottom here, this is the chattels section. So chattels is basically what comes with the properties, and it may be in the form of stoves, fixed floor coverings, which is timber flooring or carpet, blinds, curtain drapes, light fittings, alarm, dishwasher, etc., etc. You can read the rest of what's available. And you can actually add more things than just what's available on here. So you might write garden, there's actually garden shed already there, but so they've got, do they have a washing machine? They've got washing machine taps. However, if the vendor already has a dishwasher or a washing machine and they're moving overseas and they can't be asked selling it or for whatever reason, you might ask them and say, well, are you, what are you going to be doing with this? Are you going to be selling this, or are you just going to be giving it to someone? And if they say, well, I'm just going to be giving it to someone, and someone's going to have to come pick it up, and I'm going to have to schedule someone or ship it out to someone, and that's quite time consuming. So you might ask them and say, well, would you mind if you threw this in, because it takes the hassle of you having to find a new buyer and move the whole thing around, and you don't have to uninstall it. Would happily take the dishwasher and washing machine if you're willing and prepared to provide this. I've heard of stories where property traders and other investors alike have put in all sorts of chattels in terms of what they're wanting, and it could be the case of adding in a TV or a stereo sound system, or the furniture fully furnished, and it's entirely up to you and the vendor on how you negotiate what's involved in the chattels. And I've even heard of a really funny story where an investor, a property trader, actually said, well, I want all the family photos as well. And that was quite strange to me, but the reason why he did something like this was it was used as leverage. So the vendor obviously would be disgruntled to say, no, you can't have those are my personal things, you definitely can't have the photos. Well, okay, if I can't have the photos, then I'm going to be settling on this date, you're going to have to let me do this, or I'm only going to be prepared to pay this, right? So there's a whole bunch of ways using the chattels can actually help you as leverage when it comes to negotiating price points, settlement dates, and anything else that may work to your advantage and your favor. Lastly, what I want to go over as well is you want to ensure that everything that's going to come with the property is available, and anything that's not is going to be crossed out, because if you don't actually cross something out, that means the vendor actually has to provide you this. So that means upon the settlement, and you haven't crossed out burglar alarm, well, guess what? The vendor actually has to provide you a burglar alarm. Of course, if you're a nice purchaser, you'll say don't worry about it, and that's fine. Very careful when it comes to on-selling a contract like this, because if you forget to cross out certain chattels when you sell, the end purchaser may actually say, well, you said it was going to come with a garage door opener, you haven't provided that, you're going to have to go out and get it before settlement, or knock some money off the purchase price. And that's again a drama that you don't want to, you want to avoid if you can. So that's something to keep in mind in terms of the chattels and understanding the due diligence clause as well. Now, on the further terms page, I can actually write a lot more clauses that I can introduce myself, and I'll actually be going over some of the clauses I'll be inputting myself personally, which helps protects me and allows me to do certain things with the property. But let's just go over the simple clause for the time being, and let's talk about something more in depth on the upcoming weeks as well. So on this slide, what we're going to be covering is the signing page, and it's titled Schedule 2, and it's basically everything to do with GST as well. Now, your lawyer will actually be able to help fill all of this stuff in for you guys as part of their services, so it's not something we have to worry about too much. But just to break down the overview and go over the more important stuff, I will be covering this for you, so you can have a good idea of what everything means and where it's supposed to go anyway. So section 1, you see the first thing I've highlighted there, and that says the vendor's registration number. So very straightforward. If the vendor is GST registered, this is where their GST number would go, and you would ask the vendor if they are, what their GST number is, so you can actually write that in the sales and purchase contract. Number 2 is part of the property being used as a place of residence at the date of the agreement. Normally it's a yes. I haven't really put in a no before. It's always been a property that I've bought being a residential property. It's either a tenant living in there or the actual owner occupiers living in that property. So normally a yes is what we either circle, and no is something that we cross out. Number 3 is the purchaser is registered under the GST Act and will be so at the time of settlement. That's normally yes, because if you are a property trader, you do have to be GST registered, so that's something that we circle yes for. Number 4, the purchaser intends at settlement to use the property for making taxable supplies. Again, if you're property trading, you'll be circling yes, because basically when we buy the property from a all-inclusive GST purchase price and the vendor isn't GST registered, what we'll be doing is claiming the GST portion back. So out of a $500,000 purchase price, there's a good chunk of money that we can pull back as a GST claim. But keep in mind, when we sell that property, we also have to pay that GST section portion back as well. Number 5, you enter your details, very self-explanatory here, your full name and address and registration number if you are already registered. If not, you can leave this blank. Number 6, basically, what does it say? It says the purchaser intends at settlement to use the property as a principal place of residence by the purchaser or a person associated with the purchaser, etc., etc. So this one here is something I circle no for, because it's something I'm going to be selling. It's not something that's going to be a primary place of residence for tenants or myself or anyone that I know. And the next section is asking the purchaser intends at settlement to use part of the property as a principal place of residence by the purchaser or person associated with the purchaser under the GST Act. So same as above question, it's really no difference. Again, you circle no for this. Number 7, the purchaser intends to direct the vendor to transfer the title to the property to another party. And this is basically what they call nomination, and that's what they're talking about here. So if you're not nominating the sales and purchase contract to another party to take your place as a buyer, then you circle no. If you are trying to nominate it to another entity, which might even be an entity that you own, then you'll be circling yes. But again, keep in mind your lawyer can help assist in this process. It's all part of their service. Section here, so we're halfway through, it says, if the answer to question 7 is yes, then please continue. Otherwise, there's no need to complete this schedule any further. So let's just go over everything anyway, just so you guys understand it all. And number 8 is asking the nominee is registered under the GST Act and expected by the purchaser to be registered at the time of settlement. And this is when you're nominating the contract out to another entity that may be GST registered, and depending on if they are GST registered or not, of course, that would depend on your answer. So if your nominated GST entity is GST registered, then you will be circling yes. Number 9, the purchaser expects the nominee at settlement to use the property for making taxable supplies. And again, if the nominated party is going to be claiming the GST, which is what it's essentially asking, then again, yes is the correct answer. Moving forward, if the answer to either of both of questions 8 and 9 is no, there's no need to complete the schedule any further. However, if they circled yes, you're going to continue completing the GST information here. And number 10 is asking for the nominee details. So the person you want to nominate the sales and purchase contract to before settlement, you're going to have to put in their full name, address, and registration number of their GST if they have one. Number 11, the purchaser expects the nominee to use a property as a principal place of residence by nominee or a person associated with the nominee under the section of the GST Act connected by blood relationship, marriage, civil union, de facto relationships, or adoption. And again, basically what that means is the nominated party, let's read the second one first as well, or the purchaser expects the nominee to intend at settlement to use part of the property as a principal place of residence by the purchaser or person associated with the purchaser under section of the GST Act. And basically what that means is if the nominated party intends to live there, then circle yes. If they don't, then circle no. Again, for myself, guys, personally, I don't fill this page in at all. I let my lawyers handle it, because your lawyers should understand if you are GST registered, and they understand the tax implications involved as well. Your accountant will also be able to elaborate on this and help you in assisting with completing this page as well. Now, lastly, what we have here, there's two boxes that I've highlighted down below, is where we sign. So it's the signature of the purchaser, i.e. myself buying the property from the vendor, and it's also the signature of where the vendor goes to agree that everything we've discussed is a mutual understanding, where, you know, that covers the purchase price, it covers the settlement price, it covers the deposit price, and it covers all the conditions in relations to the limbs, the building reports, any other conditions that we've talked about on the further terms and sales page, and the chattels. You know, so if both the vendor and the purchaser agree on everything, this is where you'd be signing on this little line here. And if there's more than one party, again, they'll just sign below, on top of the first signature, they'll just sign below that. And if they are selling via a company, keep in mind it's best practice to get the vendor to also write director of XX company, you know, whatever company that they're the director of, as well as making a signature as well. And there you have it. That's the signing page. Very important page to ensure, you know, once you get the sign, it's binding. Right, and we've even covered the GST portion, which you know, that's something your lawyers can help you elaborate on when it comes time to actually purchasing a property, whether the vendor is GST registered or they're not. So now we've pretty much reached the final page where we can actually add in our own additional custom information. And you can see that there's two main boxes. One box is for the vendor and one box is for the purchaser. And very straightforward, it's where you both put your own details where you can contact each other, as well as putting your lawyer details and the vendors putting their lawyer details. So the vendor's lawyers can also reach out to us should they need, or reach out to our lawyers, and vice versa. So let's cover the first section with the vendor. Very basic, as you can see there. That's where the full name of the vendor goes as per the title, and a contact information as well, which can be a phone number and an email. The best point of contact where you can actually reach the vendors, and should your lawyers need to reach them, or should their own lawyers need to reach them, that's the information that you want to be displaying. Now, the vendor's lawyers is where you'll be writing in the firm. So it's the vendor's lawyer's firm name, the company name, the individual acting lawyer's name as well, and the individual acting lawyer's contact details. So most often this will contain the phone number and email as well, and or address with a physical address, as this can help the vendor and yourself should you need to go on site physically as well. Same idea for the purchaser. There's no different. You write down your name or your company name or trust name, when whatever you use to purchase the property, and whatever is displayed on that first page of the sales and purchase agreement. You've also put down your contact details, so the lawyers know how to reach out to you. This can be a phone number or an email, whichever is most convenient for yourself, and your own lawyer details, which is your firm, your individual acting agent, and their contact details as well. So this is a very basic page, and actually you can often leave this blank until you move forward down the track with your sales and purchase agreement. So, you know, I've been explaining conditional and unconditional quite often, and you know, although we'll cover it later on, just to give you an idea, a conditional agreement is something that's not going to be fulfilled until all the checks have been ticked off. You know, all the checks of the due diligence have been ticked off. An unconditional agreement means it's going ahead regardless. There's no more conditions. And a good analogy on how I explain the conditional and unconditional is, you know, your family members is what you give unconditional love to. You know, whether they've done something bad or they've upset you in any way, you still love them. It's unconditional love regardless of the circumstances. Conditional love is, you know, I only love you if you do something for me or certain things for me, and that's the difference between a conditional contract and an unconditional contract. So often this is often left blank for me. I do encourage the vendor to give me their lawyer details if they have any information to provide, or if they don't actually have an existing lawyer they use, or it's been so long since they first purchased a home and their lawyers are no longer in business, then what I suggest is I encourage them to put down a conveyancing lawyer that they can easily find on Google. And you know, they're all the same services. They're there to help transfer the title from one person to another party. So you know, that's something I can encourage and help the vendor with should they not already have a lawyer in place. And you know, my purchaser information and the lawyer I often leave blank because there's a few lawyers I personally use myself, and I like to kind of work with several different lawyers throughout the year. And you know, one agreement I might give to this lawyer, lawyer A, and another agreement I might give to lawyer B. So before I've actually decided, I will just leave it blank. And because it's normally a conditional agreement, I don't actually provide the lawyer details until at which point I realize I'm definitely moving forward with the deal, and at which point only then will my lawyer will start charging me. Not sure how it works for all lawyers, but some lawyers may charge you by the hour even for processing conditional agreements, and that's something you may want to make your vendors aware of, because if the agreement does not fulfill to the end, and they've taken conditional agreements or multiple conditional agreements to lawyers for checking, well, guess what? That vendor still has to pay for those billable hours in some way, shape or form, because it's something that we're not going to be providing or covering for the vendor. So on the slide here, where we can see an example of the lawyer details page actually filled out, just so you guys get an idea of what this should actually look like. So you've got the date on top there, you've got the vendor's name, you've got their contact details, which is their phone number. We've got the firm, the lawyer's firm company name, which is Property Conveyancing New Zealand, and we've got the individual acting agent, the individual acting solicitor, which in this case is Michael Baker. And same idea for the contact details. You've got the landline number, the most convenient email, as well as an actual address as well. Very similar to the purchaser side, you can see it's Joe Bloggs Property Limited, with Joe Bloggs as the director, contact details, Best Property Lawyer NZ as the firm, and Richard Thompson as the individual acting agent, with the details below as well. So very straightforward. This is one of the more easier pages that you guys can pick up and learn and start doing, you know, and you can be on your way. So on the slide here, I just want to cover quickly initialing changes, and you know, it's something that you'll most likely come across when you are negotiating on a contract and going back and forth with the vendor. So you can see here that the original purchase price at $641,200 has actually been crossed out, right? So the new purchase price of $632,900 has been written in, and same idea with the deposit underneath. $5,000 has been ruled out, and $10,000 has been put in replacement of $5,000. And there's initials with both the vendor and the purchaser right next to those changes as well. My understanding and my assumption is that we've increased the deposit, right, by $5,000, bringing it up to a total of $10,000, but we've actually reduced the purchase price as well, almost by another $10,000 odd. So you can see that in this situation, the leverage of, you know, Mr. Vendor, can I give you more deposit? Would that make things more beneficial to you? And if you could early access the money, would you consider reducing the purchase price to $632,900 for me? And in this instance, both parties have agreed, which is why Joe Bloggs has initialed, and so has the vendor, which is John Smith, I believe it was as well. So, you know, it's very important that any changes that you make, initials have to be done from both yourself and the other party and the other vendor as well. And if they don't agree with it, then that means your agreement isn't going to be fulfilled, and it's not binding either, because you've adjusted the changes and your previous changes are no longer certified or authorized by the vendor. Right, so it's very important any changes you make to get initials next to them. Otherwise, you will have to go back and get these initials done anyway, and your lawyers will make you go back and do them, because they're very important, and without the vendor signing off on it, it doesn't mean anything. Now, contrary to popular belief, you don't actually have to write initials on every single page of the sales and purchase agreement. And you know, we've covered the main pages where we write in our custom information, which is the first page, the further terms of sale page, the GST and signing page, as well as the lawyer page, right? Those are the areas where initials are mostly required and signatures as well. But during the in-between pages of the contract that you've seen on the downloadable section, from clauses 1 to 17, because we don't actually make any of those changes, you don't actually need to put initials down the bottom. Completely up to you though, if you feel that it makes you more at peace or it makes you feel more comfortable by putting those initials on all those different pages, clauses 1 to 17, you're most welcome to do so, but ensure your vendors also have to initial that same area as well if you're wanting to do that. So just something to keep in mind of as well, guys. So we've basically covered the basic fundamentals of a private sales and purchase agreement where it is binding, and we've gone over where to fill in certain information, where to gather this information from, and where we put in our own custom information as well. Now we're going to be going over what a auction sales and purchase agreement is, as this is the only different agreement that we need to be aware about as well. Now, the good thing is this sales and purchase agreement via the auction is normally filled out by a real estate agent when you've actually won the auction. And we'll go over briefly the main differences, basically the front page and the memorandum of contract. And basically, you know, this agreement that we're going to be covering doesn't have any conditions. So because it's an auction, and most auctions are unconditional. In fact, all of them are unconditional. And we're going to be going over the big differences between this agreement and the private SMP agreement that we've just covered. So you can see on section number 1 here, we've got the auction details, you've got the auctioneer, place of auction, date and time of auction, and the licensed real estate agent acting for the vendor. So this is just where the details goes, and this is what the agent will help you fill out. On the second section, particulars of properties, you can easily understand all of this because it's the exact same as you would see on a private sales and purchase agreement as well. And number 2, we're going over the chattels. Very similar, it means the exact same as the chattels on the further terms of sales page on a private SMP agreement, but the only difference is that it's actually on the front page. Tenancies we've already covered as part of the private sales and purchase agreement, so we already have established what that is. And number 3 is conditions of sale. And you can see if you read clearly on the conditions of sale, there's actually no conditions because you know, the conduct of an auction is everything goes unconditional. So because everything is unconditional, the conditions, there aren't any, right? And number 4 is the conduct of the auction. And this is basically the rules that are in place for an auction, and it's something that you guys can kind of read through yourself to get a better understanding of what you're obligated to do if you actually do win the auction. So you can't, you know, bid for fun and then expect not to pay for the property and just leave. You know, it's not on. So this section is explaining all the rules in place for an auction, which the real estate agent will help you explain anyway. And other than those changes, the rest of the information, such as the purchase price, deposit, the vendor's details, and anything else that we can see on the private SMP agreement, well, that's just all completely on a separate page. But the main things I wanted to bring to your attention, guys, is the things that are different on the auction sales and purchase agreement, which is number 1, the auction details, number 3, the conditions of sales, and number 4, the conduct of auction. Other than that, it's pretty straightforward stuff. It's very similar to a private SMP. So if you understand the private SMP, you're going to understand this very clearly. And the main thing is that the agent will actually help explain this to you when you're going out and buying a property through an auction anyway. So it's not something that you guys need to worry about or stress out too much or even look into too much detail at this stage. So now we're going to look at another page of the auction sales and purchase memorandum of contract agreement. And to make things easier, it's basically a combination of the first page and the GST page of the standard sales and purchase agreement that we looked through previously, of the private agreement that we looked at. And let's just cover the top to bottom so you guys understand everything. So number 1 is the date of memorandum, which is the date of the auction. Number 2 is the purchaser name, where you put your own name or your company's entity or a trust or anything like that, and or nominee, which we normally leave blank because that's just meaning you're allowed to nominate the purchase to a different company. So we always leave that blank. Number 4 is the purchase price that you've won the property for. And again, number 5 is whether you highlight whether you want to include GST that's inclusive, or whether it's plus GST, depending if the vendor's GST registered or not. Number 6 is the deposit amount that you're required to pay. And number 7 is where you put, where the vendor has signed, and number 8 is where the purchaser yourself has signed. So very straightforward and very easy to understand, comparable to the private sales and purchase agreement, because everything that we've done there can apply on the auction sales and purchase agreement as well. Other minor differences compared to the private sales and purchase agreement is that on the further terms of sales page, the only difference is that the chattels are noted on page 1 under an auction. So you can see that on the left we've got the private S&P agreement, and on the right we've got the auction S&P agreement. Often it's left blank, and all the chattels are actually going to be noted on the first page. So that's the only main difference for the chattel page here. So guys, you can see that there's not the biggest difference between a standard sales and purchase contract versus a auction sales and purchase contract. And the only other minor difference to note here is the GST schedule page, which you can see on the left hand side here is the standard sales and purchase GST schedule, which also has the signing down the bottom. Now on the auction sales and purchase agreement, the only difference is that you do have the GST schedule here, but the signing page is actually going to be on the next page. But other than that, it's pretty similar. It's very easy to understand, and equally the auction sales and purchase agreement is something that agents are going to help you understand and explain to you anyway when you are looking at purchasing a property via auction on the open market. So don't stress guys, nothing to worry about too much at the time being. As long as you have the standard sales and purchase agreement down pat, you're good to go, and you can almost start making offers with that due diligence clause as well.